Hello, everybody, and thank you for joining me again on another episode of Powerhouse U. Today, I am accompanied by Tracey Wilford. Yay, Tracey! Raise the roof over there, Tracey.
Hey.
Raise the roof, Tracey. There you go. Yeah, there you go. All right, Tracey is a first-time one-year investor. Actually, this is actually her first year as a general partner in a syndication. And Tracey is actually going to give us important information on what it takes to actually start when you're doing multifamily syndication and what her experience has been along the way. And then, too, there is a funny story behind the name of her business and what she's going to share with us. And we're going to go from there. So, Tracey, your turn.
Hey, everybody. Thanks for listening. It's an honor to be here. Thank you, Jacqueline, for having me. So I am the vice president is my husband of Mediterranean and Baltic Avenue. We have 5 kids together. And during COVID, during the lockdowns, we would spend a lot of our time doing game night. And one of the fun games that we would play is Monopoly. And we'd always had aspirations to getting into real estate. We just thought it was a lot harder than it is. And so we thought we had to go single family first. We didn't even think multifamily was even obtainable for us. So we would play Monopoly, but because we're such a big family, the pieces and the properties were very scarce. And so if you didn't buy it the second you landed on it, you were SOL. And so anyways, my daughter got Mediterranean and Baltic Avenue. She was the only one, she's the baby, she was the only one who got a full set. Everybody else was trying to trade to get 4 railroads, and everybody's like, no, I'm not going to trade because then you're going to charge me too much rent. And everyone's about their hustle, and nobody wanted to trade. She ended up kicking all of our butts with the 2 trashiest properties on the board. She was collecting rents, she was getting paid, and we were all pissed. And she won, and she had the most little evilest laugh. I'll never forget it. And so it was just, that's where we came up with this name, is because we realized, okay, we're going to start with these C properties and we're going to value add and we're going to improve that for the tenants, and we're going to bring value to the community that they're in, because these hardworking people deserve a nice place to live. But it's a nice obtainable place for us to start. And that's where we are in our journey.
Your daughter, she banked on C-class properties.
Yes, she did.
Yeah,
She was.
that's funny. And is it safe to say that Monopoly probably played a part in you wanting to get into real estate in real life, or was it just a game you guys played?
It was a game I played since I was a kid, and I always just thought, like, if it could just be this easy. And I think, I don't know about you, but for me, in the way that I was raised, it always seemed so unobtainable. Like, you have to have all these millions, you have to have so much money, and it's so hard. And then I learned quickly that it's not that hard. It's just what kind of deals are you looking for, which kind of makes it easier or hard versus harder.
Yes, because I could say too, when I was watching YouTube or anything else before I got into real estate or learned what syndications was, I would hear people say, I own 232 units, I own 500 doors. And I'm like, how are they even getting all this money for the down payments? Like, must
Right,
be nice. And
right.
then I found out what a syndication was. And I was like, oh, so that's how they're doing it.
Yeah.
So tell us, how did you find out about syndicating? And when did you just say this is, we know you started like a year ago. So when you started, when did you say, today I'm going to give it all I got, and we're just going to get this started?
Yeah. Well, it's kind of funny. I always start this story with, I had a, I had an idea for another company that I had been sitting on for a while, and I shared it with someone because I didn't want to do it alone. I had done entrepreneurship by myself. I know how hard it is to be a business owner all on your own. And so a friend was like, "Oh, let's do it together." So she picked my brain about this idea, and I'm just going to shamelessly. It's a ride share for kids. And she liked all my ideas and then decided she was going to do the company without me, but told me I could invest if I wanted to. And so in my previous profession, I was coach. So I asked myself, I just really kind of dug deep, like, how did I create this? How did I source this? And I'm like, well, first of all, I sat on this idea for 6 years and I didn't do it on my own. So what do I want to do? What is something that's so big and stretchy that I've always wanted to do that just seemed too big? Because she clearly thinks she can go do this all on her own. And I feel some type of way about it. So
Are you guys still friends?
I am grateful for the experience that I had through her. So I will say this, that I grounded quickly in my vision to own multiple apartment complexes. This is something me and my husband had always discussed, what we would do with a complex if we got it, how we would run it, things that we would do that were better, because we lived in some of these types of places, right? And so right after that, I kind of sat with the intention of this, and I ended up coming across an Instagram ad, which I normally would never even pay any attention to. But this person was just speaking through me. It was Tyler. Oh my God, I can't think. It was Devereaux, Tyler Devereaux through Multifamily Mindset, and went through a 1 hour seminar. Loved what they had to say, and it was some of the things that they were saying that I was like, this can't be that easy. This is too good to be true. Then I went to a 3-day event, and I signed up for their coaching and mentorship program, and that was in February, March of this last year of 2022 that I started, and I've been grinding at it every day, just fully lit up and passionate about it.
Yes, because I could say every time that I hear you speak, I'm like, this girl knows her stuff. You played absolutely no games when it came to educating yourself, learning what it took, and just, you know, hitting the floor running once you made it up in your mind that you're actually going to do it, which is great because, you know, the proof is there that you're definitely doing, you know, you're doing the work, which is
Yeah.
good. Is definitely something to be proud of. So I'm proud of you.
Thank you. Well, the only way we can fail is just to stop refining our learning, right? Like
Hmm.
like even like what you're saying all about my friend. Yeah, like I get to continually refine relationships. I get to continually refine what my vision is. So
Hmm.
where does one get started in this? And I would highly recommend listening to podcasts like yours.
Hmm.
There are several others that you can come across that are helpful with this. Networking, finding other people who have a similar vision, learning from other people, get yourself a mentor if you can afford it, get yourself a coach, and just really put forth the energy every day, 1%. If you could just increase your knowledge and experience 1% every day, then you're going to get to that vision completion. And for me, that vision completion is to be an owner and operator. I
Hmm.
want to be on the LP and GP side. And for those who don't know what that is, passive investing on the deal and then actively participating on the deal, running the operations of the property, not the
Managing.
property management, but managing the property management and making sure that the investment goes well. To me,
Yes.
that is beautiful because you get
So you
paid.
manage the manager to make sure
Yes,
everything goes as planned and make sure that the people that are investing in the deals are getting the returns that were
yes,
promised. Yeah.
absolutely.
And then you right now you're on the deal that you're actually scheduled to close. Congratulations. You are the general partner or the limited partner?
Yes, I'm on the general partner side.
You're on the general
Um,
partner.
yes, I'm on the general partner side, and I'll be supporting with implementation of the underwriting through asset management, which means the financial plan of this asset. I am going to support in implementing that to make sure that our investors get their money back. So we're putting solar on the roofs are getting repaired. So I get to make sure that those jobs are getting done
Hmm.
through management of those other people.
And you are in what city?
I'm located in Tampa, Florida.
Tampa, Florida. Is the property that you syndicated, is it in Tampa as well?
No, and that's the magic part of this. Like most people think like it has to be where you live. It doesn't. This is going to be in Port Arthur, which is in Texas, and it's an emerging market. There's going to be major companies that are moving there. So there's going to be like 10,000 jobs, and there's already a shortage of rents. So that means that we can force appreciate our values, which means we
Hmm.
can improve the property and raise the rents and even make more money and sell it when it becomes super profitable. So yeah.
And you don't even have to live in the same state where the property is that you are investing in. And as you heard Tracy just say, she is going to be managing the property in Texas from Florida. Must be nice.
Yeah, I mean, it would be great. Like right now, I just underwrote a deal that's here in Sarasota, Florida, and the deal looks fantastic. So ideally, I would like to be boots on the ground. That's what we call it, boots on the ground. I was making a joke
Hmm.
to boots on the moon from Space Force, but it's nice to be able to drive by an asset and say, "Oh, like, I own that." But ideally, you want to be in a market where you can get something for a good deal,
Hmm.
and be unattached to that. And so, having a network, a nationwide network, where you have
Hmm.
people in place in different markets, really opens up the possibility for you to general partner on a deal.
Hmm.
And that's why I say, like, really start with networking, really kind of learning. If you can LP in the beginning, like if you have some money to put down, it's a fantastic way to start learning.
Hmm.
Um, but really, it's relationships. This is a relationships game.
Absolutely, absolutely. And then too, so when we're talking about the deal that you're working on, and then talking about loan structure in order to get these done, you and I talked previously about a recourse loan versus a
Yes.
non-recourse loan. So can you break down what both are, and then
Yes.
relate that topic to the property that you're working on right now?
Yes, absolutely. So every person listening to this podcast is familiar with a recourse loan, whether you know it by that word or not. It is your car loan. It is the home that you live in. It is sometimes credit cards. So basically, a recourse loan means that you are signing over to the bank that you are going to pay back the entirety of the loan that you are borrowing. So if they come in and repossess your vehicle and you're still short $5,000 after they take the vehicle back, then technically the bank can come after you and garnish your wages and or do a bank levy or something to come after you personally, sue you, whatever, come at you to get some other type of assets to cover their losses. That is a recourse loan, and it is typically based off of your credit score, and your personal income. A non-recourse loan is similar in the way that the bank needs collateral, right? Like with a recourse loan, your car is the collateral plus whatever other assets they can come after you for. But a non-recourse loan means that, um, once the deal falls through, the apartment complex is no longer successful, you're not able to pay the note, you just give the complex back to the bank. There are some recourse loans that will take the entire SREO, which is the scheduled real estate and like list of the sponsor, the financial sponsor, as
Hmm.
collateral, depending on the net worth. So there's a couple of things. The bank wants to see that a sponsor, financial guarantor on a deal, which is something that a new person would need. Um, they would have to meet the qualifications of the net worth, or the entire GP team's net worth collectively must match the property that they're looking for. Um, they must have some sort of experience, and then they also want to look at who's going to manage the property, not just the asset management team for the GP side, but the property management in place. Now, that's a lot different than you trying to qualify to buy a house on your income, because when you're trying to qualify for a non-recourse loan, it's not Jacqueline's income, it is the property's income, and this begins at 20 units in most states and up. So
Hmm.
if your next door neighbor is going to go buy the duplex next door, it's off of their credit and it's off of them personally, and their assets are on the line. If it's 20 units above in most states, then it's off of the net operating income, which is the income minus expenses of that property. Same thing for a gas station. You want to go buy a gas station, you're not going to check your credit and your income. They're going to see what that gas station makes. Can that gas station income pay the bank back? And if
Hmm.
it can, then you're more likely to get it.
Yeah, which is oh,
Yeah.
which is great information too. And then too, what I could also do during this video is refer you guys to a video that I actually did a while back with Kathy Irby of California Commercial Bank of California, and she actually went over the some of the requirements for applying for alone. Even though she doesn't do multifamily, a lot of what the information that you're referring to could also be, valid, with the information that she shared with me a couple about a week ago, a couple weeks ago. So yes, the information is great. I love that you're
That's
actually
great.
echoing a lot of what she said.
Yeah, that's
That's
fantastic. So it really just depends on where the people are starting. So like you start, you build your relationships, you find out, what who's going to invest in your deal, like of your friends and family. What is what is the net worth of your network, and how can you get support financially to raise money? Because if you're going to look at buying an apartment complex and you need somebody to sign on that line, yeah, they're not financially, personally liable. However, it goes on their track record for their real estate. And so their name is on the line. So if you can bring value to the deal with, raising capital and bringing money to the table, and then you're more likely to get that. And for some people, it makes more sense for them to start on the recourse side of buying a duplex, a fourplex, house hacking, living in one, renting the other to start gaining some net worth and experience. So,
right,
yeah.
which is understood. So how did you, when you decided to start, how did you find the people that you were going to work with? What was the process like?
So, like I said, I thought it was so hard. I was paying off I did the Dave Ramsey, I snowballed all my debt, and I was paying everything into my house, thinking me personally having so many kids, I didn't want to like start buying single family homes with me having my own house paid, thinking about repairs, thinking of all the financial liability that comes with that. When I went to that 3-day event and I learned that there's non-recourse loans, it completely shifted my mindset. I started looking at the debt that I have in my home, and I started looking at leveraging debt and like all the different ways that I could use money to make more money, and thinking bigger, because the more doors that I have, the less risk I face. So, for instance, if you have 4 units and only, one person doesn't pay rent, that's going to hurt you a lot more than if you have 100 units and 4 people don't pay rent. So when I started to see that at that 3-day event where I was able to learn and to hear how this person was putting it into ways that I could understand, and I have no real estate experience. So you don't need to have a broker's license. You don't need to be a real estate agent. And that is something I get asked a lot. No, you don't. You have to be able to simply grasp some of these concepts and build relationships with people. Um, so to answer your question, I paid for coaching, because I
Hmm.
wanted to be taught. I didn't want to make it harder on myself because, like I said, I've done a lot of things on my own throughout my life. And you can go farther together. If you want to go
Hmm.
fast, go alone. If you want to go far, go together. I love that proverb. Um, so yeah, I paid
Yeah.
for mentorship.
Yeah, yeah. So you pay for the mentorship. So with the paid mentorship, are these the people they're the ones that are helping you on the way
So
to?
the company itself doesn't give you a mentor, but they give
Hmm.
you access to a network. They have online portals with educational videos. They do weekly coachings. They have several different very supportive educational videos and PDFs and templates and scripts and all of the things that you're going to need to succeed. But then they also put you in together with hundreds of other people who are striving for the same goal and
Hmm.
vision that align with the values of providing value, not just seeking what you can get from a deal. And so that's what I love about this program of multifamily mindset that I went into. But there are others like the GOB that I met you through, where you don't necessarily need to pay and you can still rub shoulders with people who have the same vision.
Hmm.
And I think this has worked out nicely between the two of us too.
Very, very much so. Oh, and then so from your experience and this being your first year, what would you say you like the most about it, and what do you like the least?
What I like most is the possibility and the legacy, the family legacy of generational wealth that I am in the process of creating. What I like most is that I am in control over what I create. I'm not working for someone hoping to get a raise. I am not seeking for any monetary affirmations from outside of me. It, I am doing the acquisition. So I'm the one that's sourcing the deals. I'm the one creating the relationships with the brokers. I'm the one doing the market research. Is this a good neighborhood? Is it not? Would I live there? How much can I charge? And then I'm the one that does the underwriting. So I feel like I'm the master of my experience in this, which I like because I'm a little bit of a controller. And what I don't like is how often I do that and the deal isn't good. And it gets disappointing. And so it's like I've underwritten hundreds of deals and I've only found two that worked. Now, granted, I was like a rabbit chasing my tail or a dog chasing my tail because I wasn't really refined in my systems and my routines on what I should be doing. That's where this coaching has really helped refine me. I was like, hey, this isn't working. That's not working. They're like, hey, do this, do this, do that. But ultimately, right now, that's all I can really say is that
You were
until
able
you
to
really,
focus, and yeah, and then just like what they say with being an agent too, which is factual, you have to get a lot of no's before you get a yes. So from your perspective, have to put in work and actually do the
mhm.
numbers, underwrite it, and underwriting does not take 5 minutes. So
No, it can
so
take 2 days in the beginning to get down to. I've gotten it down to now to down to 2 hours, and
mm-hmm.
that's in a detailed analysis over the course of the 5, 6, 7 year hold of the property. I can go in now and tell the investors this is what you're going to get year by year.
Mm-hmm.
And what I love about it though is, yeah, I might do a lot of hours, but if I close one deal, I will make more in one deal than most people make in 1 year
Mm.
of working a 9 to 5.
Exactly.
And when you see that payout, you're like, dude, your first check is this much, then I get this every quarter, then I get this at sale. You're like,
Right, right. And then too, so which is important, and I'm pretty sure with you being one of the general partners on the deal, you're going to make sure it gets done and make sure
yeah,
it happens for yourself and everybody else, which
yes.
is, which is good. And then, like I said before, I could definitely tell that you're focused and you want to do it. And like I said, I've heard you talk so many times and you've even taught me, which is why you're here, like I give everybody who has inspired me, gets a little play on the channel. So
Oh, thank you.
Powerhouse Tracey, bravo,
I love
clap,
it.
clap.
Thank you.
You're
No, and thank you for having me. And yeah, and so I just can't stress it enough though. If you go into this with the mindset of how can I provide value to other people, and find out what they need. If you can find out what other people need, then they're going to want to give you what you need and they're going to want to reciprocate that and put the
mhm.
investors first. Because if you burn your investors, you're never going to have another deal. So those are like the main nuggets. Like come to people that have more experience and try to provide value to them, and they'll want to support you along the way. If that can land, I think that they'll go far with that. That's what's helped me really kind of push
Mhm.
myself in the right direction.
So, okay, so we look backwards. Looking forward, what do you see yourself doing as far as syndications go? What is the vision that you have for yourself with
Oh
this?
gosh, I'm gonna close so many doors. I mean, and when I say close so many doors, I mean I'm going to purchase so many properties. I want just to be a well-oiled machine. I'm like manifesting $75 million net worth, 4,000 plus doors, and because really, besides all the materialistic things that I want to do and provide for my family, I want to create a nonprofit. I want to rescue animals that are too aggressive that like the shelters can't do anything with because I had pit bulls and I recently had to lay them to rest and I don't want to personally own anymore. And how can I provide value to society and to them? And it's like I want to do something to that magnitude. My husband will actually focus on that, but it's what can we do with it? People are like, oh, I want to save the dolphins. Yeah, I want to save the pit bulls. I want to save the bunnies and the cats and the things that don't have a home because there's so many out there. So going forward, legacy going forward is helping other women entrepreneurs, breaking systemic ancestral poverty. Like that to me, if I can just change the trajectory of like one family of their systemic ancestral poverty, then I am super complete. And that's where like sponsoring and mentoring and coaching comes through. And I'm definitely going to do that for this company that I hired to mentor and coach me. It's awesome.
Definitely, definitely. All right, so we are going to close with that. That was very inspirational. So you see what it's like, just a little bit. The first year getting into it, there's a lot of learning involved. There's a lot of underwriting involved. There's learning how to underwrite involved, and learning how to underwrite, I would say, is not fun, but it's a part of the job, and it definitely has to get done. But in the end, the reward is definitely worth it. So once again, I would like to thank you, Tracey, for joining us today on Powerhouse U. And then I stated earlier, Tracey and I are in actually two groups together. We are in the GOB network, which is a syndication of multifamily investments. And there was a spinoff from GOB, which is GOB Inc. INQ Investor Network of Queens, in which it is an all women network group to do pretty much what the GOB network is doing, which is bringing in investors. But we are focused on the women, giving them a place to come, express themselves, underwrite deals, bring deals to the table, and invest in order to bring more women into the investor network as entrepreneurs, business owners, and help get Tracey to that. Did you say 75 million?
Oh yeah, net worth. Yep.
Let's
Think
help
bigger.
her.
Think bigger.
And you too, if you have a goal that high of wanting to get to 75 million, just join us. Reach out to Tracey if
Yeah, because
you see
I
your
just want to say something
information.
really quickly. Because for the
Uh-huh.
cost of the car in your driveway, 25,000 for the average American car, you can be an owner, a co-owner on an apartment complex. So let's talk. Let's
Ex-
talk.
exactly. Would you rather drive a nice car? Or
It's a liability.
what's a $25,000 car? What does that get you? Like a
Yeah.
Toyota Camry?
Like a Hyundai. Yeah.
Do you want to
A
drive
Ford.
that, or do you want to actually have money come
Mm,
to you versus
yes.
making a car payment? We're gonna
Assets
let you
versus
choose.
liabilities. Yes. Cash flow, baby. That's how you create wealth. All
Hey
right.
now. So all right, we'd like to thank you again for joining us on another episode of Powerhouse U, and we shall see you again soon. Bye.
Bye.